Hi everyone, how are you guys doing? I hope all is well. By the way, I'm Miss Jurita and you can also call me Miss Chen. You will be going to see me a lot virtually for our online lecture class. Okay, before we proceed to our first lecturing session for the course PAD370, which is the Introduction to Public Financial Administration for this semester, please like and subscribe to my YouTube channel. Just kidding. Okay class, we are going to start with our class with the explanation of the syllabus of the content first. Okay, here we go. Oh yeah, by the way, first thing first, I would like to encourage all of you to always get the bigger picture of a topic or a chapter before starting with the new lesson, okay? Get to know what are inside that chapter and get familiar with the main subtopics first. This is not to be applied only for this course, but also to the other taken courses. Okay, terms, definition, or meaning of each concept is very important in helping you to further understand any given facts or knowledge related to that concept. So please bear in your mind that for any subject that is given to you in the future, the first thing that you need to do is to try your very best to familiarize yourself with all the important concepts provided in the lesson. So for this course, Chapter 1 syllabus, there are 5 main topics as you can see shown in the slide. Okay, the first one, point 1.1, of course we are going to define what is Public Financial Administration, PFA. Already shorten it as PFA, the abbreviations. And then point 1.2, we will discuss about the scope and also the components of public financial administration. Point 3, we are going to talk about the objectives and significance of public financial administration. Point 1.4, the distinction between public and private sector. The distinction means the differences, okay, between these two. And then point 1.5 is about principle and legal framework. Okay, point 1.5 is quite technical, so let's see what we can do about it. Okay, for point 1.1, we will define what is PFA based on these criteria. The first one is we'll define what is the meaning of PFA based on scholars' opinion. What are they thinking about definition of PFA? And then second one, we will go through some of the concepts that talk about PFA, and then in general meaning of PFA. Okay, the first one, we'll take a look at the definition based on scholars, and then the first one, we're going to talk about the perspective of PFA based on the source Musa Ahmad. Okay, if you still remember, during our first class last week, I have mentioned on what PFA is all about. It is all about finance, about money and the management of the money by the government. Along the way, there will be some other criteria involved as a complement to the money management itself. In example, retrieving the sources from this Musa Ahmad. PFA involves the process of using the fund for any government activities that support government objectives in achieving set goals. It also involves the decision-making process in order to generate public revenue and on making a wise choice on spending or expenditure. Okay, apart from that, PFA is also being defined as techniques on how the government control and manages countries' resources efficiently. Okay, next one, we are going to see the definition by Hoover Commission 1949. Financial administration, which involves the machinery and methods by which the funds for the support of public services are raised, spent, and accounted for, is at the very core of modern government. Next one, according to Groenewegen, 1990, PFA is financial matters and activities of public sector. And then Fox and Meyer, okay, according to both of them, PFA is actually activities involving finance and taxation. Actually, right, all the components and all the activities related to PFA will be discussed later. It's under the component topic, subtopic. Okay, so you have to remember what Fox and Meyer said, 1995. PFA is about activities involving finance and other components in PFA. Okay, remember that. Okay, next, second one, the definition of PFA based on several concepts. Okay, I don't want to talk a lot in here, so maybe you can read by yourself later. PFA as a discipline of study, PFA as a process of financial management, as a management tool, and also as a development tool. Okay, next, in general or in conclusion, we can define that PFA is a public financial administration that describes and analyzes the expenditure or the spending of government and techniques used by the government to finance this expenditure. Alright, next, based on the picture, what can you see here? It's a boy and a telescope, right? Okay, but we are not going to describe on the telescope, but it is something related to what we are going to learn. It is scope, but it's nothing to do with our lesson today. This is only an illustration, just to cheer you up. Okay. So what is actually scope and components of PFA? Okay, what is the definition of scope? Scope is in what extent that something is being covered. In terms of PFA, it is involved in all the federal and state bodies, as you can see from the chart in the slide. Okay, this one, it's obvious, right? It involves all types of bodies, the federal, state, and also the small bodies inside the government. Like what I have been mentioned earlier on, I have mentioned this many times, that everything needs money. Our life needs money, and then even ourselves, in order for us to get money, we have to work and everything, right? So money is very important for us. Financial is very important. So common sense, right, that it involves in all scope of government body as well. How about components? Component is actually ways or the tools for the government to imply its public financial administration. So in PFA, they need to handle or manage money in order to implement government policies. So in order for them to implement this kind of activities, policies in the government, they need certain components in managing its money, its financial administration. So these are the components. Okay, these are the components. Please remember that there are 6 main components of public financial administration, in which I have listed out here. The first one is tax administration, followed by budgeting, purchasing or procurement. This is also called supply. I think it's better to call it supply. It's more updated. Alright, and then the next one, accounting is also a part of a government component in handling PFA. Auditing, always remember that auditing always comes after accounting. And then next one, treasury, which is handled by Ministry of Finance, MOC. Okay, so you can see the summary here: taxation, budgeting, procurement or supply, accounting, followed by auditing, and then treasury. Okay, since these components are very important in order to understand what is PFA all about, okay, I'm going to teach you on how to easily memorize these components. Okay, this is my kind of way to memorize things very fast. Okay, tips to enhance your memory recall. Make a story from abbreviations. Since you already know that we have tax, budgeting, procurement, accounting, auditing, treasury. Okay, so I put the abbreviation here. P. P is for procurement just now, right? B is for budgeting. T is for taxation. A is for auditing and accounting, while another T is for treasury. Okay. So what story that can you make to easily recall about these kind of components? Okay, maybe you can put it like this. P for Papa, B for buys, T, okay, simple one is t-shirt. AT you can combine, make it in one word as it. And then A, maybe Adidas. Alright, you got it already. Papa buys t-shirt at Adidas. So whenever you think about this story, Papa buys t-shirt at Adidas, you automatically know already what are all the components involved in PFA. Okay, P is for what just now? P is for procurement or supply. B is for budgeting. T is for what? T is for taxation. A is for accounting, followed by auditing, and then another T is for treasury. So there you go. You have it all. Alright, next we are going to go in details on each component. Okay, for all these components. For the first one, which is tax administration. Okay, what is tax administration? A tax is a compulsory charge imposed by the state or public authority in respect of which no specific service to the individual is rendered in return. Taxes are levied by governments primarily as a means of raising revenue to finance the operations of government. So there are two types of taxes, yeah? The first one is direct taxes, and the second one is indirect taxes. Direct taxes is levied directly on the income or assets of individuals or company. Meanwhile, for indirect taxes, it can be used to control spending on luxury goods and to discourage excessive drinking and smoking. Alright class, every country has its own system. Tax is being imposed based on the economy situation or level of the country. So that means different country has a different percentage of taxes that they want to impose to their citizens. And the ways of imposing might be different as well. Our country has imposed several taxes, in example, GST in the past, and GST is now being replaced with SST. The strategy is actually to support the government, especially in terms of money and support. Taxation is one of the government's source of income. We will discuss further about other government source of income in chapter 3 that talks about the government revenue. Other example of direct taxes in Malaysia are like income tax, stamp duty, and also petroleum income tax. Meanwhile, for indirect taxes, we have sales tax, service tax, and also the one that I already mentioned earlier on, SST, which is replaced the previous tax system, which is GST. Okay, when we go out for a dining in a restaurant, it is common that you will have to pay for the service tax altogether with SST. However, we are not going to talk about SST or any related taxation here. It is only for your understanding of the implementation of indirect tax in our country. Next is about budgeting. So, what is budgeting in PFA? Budgeting is a statement of revenue and expenditure of government for the future. It is also a planning and management tool used for national economic purposes. You have to remember, there are two types of government budgeting, in which the first one is the operating budget and the second one is the development budget, which is used to achieve government's planning objectives, such as the spending made under the Malaysian plans. Okay, what is actually budgeting in simple way, or a simple word? Budgeting is plans on how the government wants to use the money that they have. They need to spend on the country expenditure wisely based on the money that they have. For example, in the year 2020, as we all know that we are going through a rough time due to the attack of pandemic COVID-19, Malaysian government has allocated some of its 2020 budget under package rangsangan ekonomi to assist its citizen under a financial aid called BPN. Or in Malay, it is called Bantuan Prihatin Nasional version 1 and 2.0. So, BPN 1 and 2 actually covers a total cost of approximately 250 billion ringgit, This is one of the example of budgeting plan that has been implemented in Malaysia. Malaysian government choose to spend money for the purpose of citizens' welfare. Next one is procurement or supply. Always remember, guys, procurement is about supply and supply is about the purchasing of government goods, services, and works. It includes storage of goods as well as the process of disposing of the assets, in which government buys a lot of products and services, and there should be proper methods for purchasing, storing, and disposing of goods. There are also important factors to consider in buying such as honest and competent personnel, centralization, regulations, effective purchasing procedures, and effective inventory procedures. Procurement or supply, also called bahagian perolehan, will play with government or people's money. In example, in buying big assets for the country, such as an airplane or the military facilities, so they have to ensure that this supply can support the government. They play a very important role in managing the country's resources as well. So, bahagian perolehan is actually one of the badan that is also managing and trying to make sure that resources that they have is wisely used by the government and also the people. Next one is accounting. So what is accounting in PFA? Accounting is a process of recording, collecting, and disbursing of government resources, and the making of reports concerning any or all of those operations or about their results. So there are three main types of government accounting, The first one is the hybrid accounting, a combination of both types depending on the operation. Okay, you can see obviously hybrid means combination. Accrual accounting, a process of recording when the goods are received but not yet paid, and revenue recorded when it is supposed to be earned. The next one is cash accounting. Cash accounting refers to the revenue that is being recorded when it is received and spending has been made when it is paid. In other words, when cash changes hands. Accounting also refers to the government record on the usage of money, the in and out record of money flow for the purpose of government's activities implementation. Next next one is auditing. Always remember that auditing will come after accounting. So what is auditing? Auditing is a review and examination of government's revenue and expenditures. So it's actually an assessment, yeah. It's something like assessment to evaluate. So auditing is to ensure that government's revenue and expenditure have been collected and disbursed according to proper financial laws and regulations and have achieved government's objectives. So there are two types of auditing. The first one is the internal auditing, which is done by the controlling office of a ministry or department. Treasury also does auditing on all government departments. And then the second type of auditing is the external auditing, which is done by the Parliament and the Office of the Auditor General. Practically, auditing involves a process of checking the government account, money, or ledger. It wants to evaluate whether the plans that have been planned were implemented successfully or vice versa. In other words, money is used in the right way, or is there any waste of resources happen? Okay, that's the summary of it. Last but not least, Treasury or the Ministry of Finance, MOF. So I have been mentioned this early on. MOF is very important in handling the government's money. Okay, so it is responsible for all government's financial and economic matters. It is the role of MOF or the Treasury to prepare annual government budget to be presented to Cabinet. It is also prepares the appropriation bills to the table in Parliament. Besides that, Treasury, which is handled by MOF, is taking care of public money. This is a body that is responsible to manage the flow of the money. In other words, the in and out of money for the government. Okay, next one. Okay, class. What can you see from the picture? It's a dart. Do you want to play dart right now? Of course no, right? Because we are in the middle of lesson. So actually this picture represents target. Target means something that we want to achieve. Okay, what is similar with target or something that we want to achieve? It's the objective, right? Okay, so here we are going to discuss on the objectives and the significance of PFA. Actually, it's not that into a deep discussion about it because I can see that all the objectives that listed down here are very straightforward. So you can actually read it by yourself. The first objective is to achieve overall fiscal discipline, allocation of resources to priority needs, and efficient and effective allocation of public services. The second one is to ensure financial accountability of all government agencies and government-related agencies. The third one is to ensure proper management of all public resources due to high and unlimited demand from the public. And the fourth one is to ensure compliance with legal and other mandatory requirements. Then, last but not least, is to ensure government programs and activities achieve their intended targets. Same goes to the significance of PFA. These are all very straightforward. The first one is to avoid wastage of government resources. Second one is to avoid deception and breach of trust. Next one is to ensure proper revenue collection and expenditure. The fourth one is to achieve government's development objectives. The fifth one is to ensure proper implementation and evaluation of all government and economic policies. And the last one is to assess efficiency and effectiveness of all government resources. So these are all very straightforward. You can actually think it without reading or something else, something like that. Okay, next. What can you see from this picture? Two girls with different kind of criterias, right? Okay, look at this. She has a black hair, while this one is blonde. And then she has a fair skin, while this one is less fair, like a quite dark skin. But they wear the same clothes over here. So I want you to remember that every time you look at this picture, you think about the differences or the distinction between the public and private finance. Okay, so you know already what is public sector and what is private sector, right? Public sector comprises of all government-owned organizations, all agencies and state offices. So in other words, public sector is government. And private sector, on the other hand, refers to all privately owned businesses, companies, partnerships, and the profit and non-profit corporations. So what are the distinction, the differences between these two? I have already summarized for you the criteria that you can evaluate, so it's easier for you to think in the future. What are you going to talk? If people ask you what are the distinction between public and private finance, okay? So first of all, maybe you can talk about the objectives, okay? They are driven by profit or not. The second one, the accountability. The third one, who has the power to decide in order to have in order to gain something, or in order to gain what is already being planned for each sector. So who has the power to decide? So we are going to look at the criteria as well. The fourth one, beneficiaries, means who will get the benefit, okay? And then the levels of control, and then the next one is scope of functions. So there are 6 criteria that you can use to evaluate or to assess in explaining the differences between public and private sector. Okay, should we go first to the first criteria, which is the objective? Okay, what is the difference? The objective of public service is to provide citizens regardless of their financial return resulting from their services. However, for private sector, they are driven by profit. Of course, money is everything. Business is always comes first, okay? So the second one, accountability criteria. Okay, what is the difference between these two? For public finance administration, it involves a variety of institutions. The highest level of authority is to citizen. Meanwhile, for private financial administration, the highest level of authority is its customers and shareholders. Next one, decision making. This is the one that I've been talking a lot just now. Decision making between public finance administration and private finance administration. So for public finance administration, or the government body, it is controlled by elected politicians. So policy decision is based on political party in power. Through taxation, government have no choice, so they are enforced to spend depending on the level of income. Meanwhile, for private FA, decisions are influenced by market factor of demand and supply. So they have the choice to whether to spend or not, based on the marketplace, based on the demand and the supply as well. Okay, next one is who will get the benefits from public FA? It's large segment of citizen. And for private, the one that will get the benefit will be its customers and also the shareholders. Last but not least, levels of control for public FA. Various level of control, and the highest level of control is the parliament, okay, the supreme legislative institution. Meanwhile, for the private one, it is controlled by board of directors, all aspects in a small organization. Meanwhile, for scope of functions, this one is actually only talking about broad scope or narrow scope. You can see that public finance, they have a very broad scope, okay? Meanwhile, for private finance, it is very narrow. For example, functions are specified to the area. In example, AirAsia, they provide cheap, convenient air travel to its customers. So, AirAsia, they only specify on airlines. This is all about the differences between public finance administration and private finance administration. So in order to make it clear, so the objectives, we can see that for public government, the objectives is to aim at. Meanwhile, for private sector, the objective is driven by profit. Okay, next one, accountability for government. There's accountability just now. Here. Okay. The highest level of authority is in citizens' hands. So still shareholders. For decision making, government, it is based on politicians. Meanwhile, for private, it is based on marketplace, the demand of the market. Who will get the benefit? For government, it's the. Meanwhile, for private sector, it's the board of directors. Board of directors. The last one, scope of functions is broad. Meanwhile, for private, it's narrow. Right, you have that. Here you go. Okay, class, as for the second half of it, I mean the second part of this course for topic 1, I'm going to only discuss this during the tutorial class, okay? Since it's very technical, so I need you to do some exercise regarding on some articles from the constitution parts. So all the best and good luck.